Tesla was recently removed from Wedbush's best idea list. However, it still made the top of the stock market predictions from analysts like Dan Ives, who have actually been long-term Tesla supporters. According to him, the Cinderella ride is over for Tesla, and Musk now needs to navigate the company through this dark macro storm. Dan Ives is a Tesla watcher and a big critic of the company's CEO. The stock investor has for years given his opinion about how Tesla can thrive in the stock market, and now he is sounding a bit more optimistic on Tesla stock after a major hammering to kick off 2023. Hey guys, welcome back to Tesla Tomorrow. Dan Ives stated in a new client note that with the more than $5 earnings power still hittable and the stock in free fall, he still does not believe that now is the time to bail on Tesla stock, adding that the stock is way oversold and fears of the unknown are around the corner. There have always been several concerns about the stock markets, and Tesla's recent delivery miss further fueled concerns on the demand for its vehicles, which was a key factor in sending shares spiraling 65% lower in 2022. According to Dan Ives, he views Tesla as the most transformational company, potentially in the market, along with Apple. But ultimately, in terms of what happened with Elon Musk and Twitter, there's been a huge overhang in the stock. He, however, cited that there is an opportunity for Tesla to reach 4 or 5 trillion of potential market opportunity over the next 10 to 15 years. Is this really possible? More details to come in this video. But before we get into it, if you like what you're seeing, don't forget to hit that like button and subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Tesla saw fourth quarter deliveries rise 18% sequentially to 405,000, missing consensus forecasts of 418,000. The figure brought Tesla's 2022 deliveries to 1.3 million units, up 40% year over year, but below the company's guidance for 50%. Following this result, JP Morgan analyst Ryan Brinkman notably cut his profit estimates and price target on Tesla. However, Wedbush analyst Dan Ives believes that this might not be the best action for investors. Dan Ives has said that this is a fork in the road year ahead for Tesla, and will either lay the groundwork for its next chapter of growth or continue its slide from the top of the perch with Musk leading the way downward. He, however, did actually reiterate an outperform rating and a $175 price target on Tesla. Tesla delivered more cars than ever in 2022, but still wasn't enough to meet its own lofty forecasts. According to Ives, the EV market sent over 1.3 million cars to customers last year, a 40% year-over-year increase from 2021. Even with the continuous rising interest rates and persistent inflation, but Wedbush tech analyst Dan Ives said that the company missed its 50% annual growth target by a country mile. Several concerns have surfaced about Tesla's demand in China. According to Ives, the major worry now overhead for Tesla is the demand story, especially out of China, and it's showing heavy cracks in the armor at the time that EV competition is steadily increasing domestically, with NIO, BYD, Xpeng, and others fighting for a smaller pie with the Chinese consumer weakening. He wrote, "With China representing 40% plus of the global growth story for Tesla, this is a heavy concern for the Wall Street, which will likely result in more significant price cuts over the coming months to spur demand as a potential pricing war takes place to gain market share in a darker macro backdrop." Ives believes that demand is starting to crack a bit for Tesla. The company will need to adjust price cuts, most especially in China, which remains a key to the growth story. He further said that he remains worried heading into a very cloudy 2023. While speaking about Musk's ideal Twitter deal, Ives was highly critical of Musk's chaotic leadership at Twitter, and out in front of the fierce sell-off in Tesla that began in the last year. In response to this, the investor had removed the stock from his best ideas list in November, and still in that call, Tesla stock had crashed about 43%. Tesla CEO Elon Musk is currently working on a search for a new CEO for Twitter. The Tesla, SpaceX, and now Twitter CEO confirmed his plans to step down at Twitter in a tweet in December, which stated that he's going to resign as the CEO of Twitter as soon as he finds someone who can take over the job. Musk added that after finding someone for the job, he will only run the software and servers teams. In this respect, the billionaire investor posted an informal poll asking Twitter users if he should step down as the company head, and a majority of the 17 million respondents voted for Musk to leave. Musk further stated that he would abide by the results of the poll. However, he might be in a bit of a pickle here, as Twitter polls are straw polls, which means they are not comparable to professional public opinion research. Also, Musk is yet to abide by the results of the poll even after claiming he would, so it's unclear to see if he's actually going to be leaving that position. Dan Ives believes in Tesla's growth for the coming years. According to him, Tesla will be the most disruptive technology company in the next 5 to 7 years. The recent earnings report indicated logistical and demand issues, although the company's stock price is still expected to go up after these results are fixed. According to the stock expert, there is a dark cloud for the overall automobile industry, and this can be seen from GM, Ford, and taking a look at China, we've got NIO and Xpeng. The recent Rivian recall was not good from a PR perspective, and Elon Musk's antics have caused some investors to become exhausted. Wall Street is expecting Tesla delivery growth in the 35% to 40% range for 2023, which may be too high in the current economic environment, according to Ives, but the analyst remains confident that the company can turn things around and weather any potential recession. He also argued that management just needs to reset investors' expectations with more realistic delivery and financial targets for next year. Even the most bullish of analysts acknowledge that Tesla is facing short-term demand issues and struggling to meet its optimistic forecasts. But Wall Street is split on the giant's future prospects, and so there is still a lot of good to look forward to. Dan Ives holds a $175 price target on Tesla shares, which represents around a 60% share price jump. He argues that a lot of the recent bad news about deliveries is already priced into the stock, and that the electric vehicle boom is still in the early stages of a major growth cycle. Due to demand difficulties, many Tesla investors are concerned about the company's high market valuation. However, Wall Street anticipates a 35% to 40% increase in Tesla deliveries in 2023. Tesla is often compared to large automobile companies like Toyota, but the car maker has grown past the majority of its competitors, especially in terms of revenue generation. Tesla earned 8 times as much profit per vehicle as Toyota Motor in the July-September quarter of 2022, despite being outsold more than 7 to 1. This put the American electric vehicle maker ahead in quarterly net profit for the first time since going public in 2010. Tesla's success stems largely from the profitability of each of its cars, and the Toyota Group sold 2.62 million vehicles in the quarter, 7.6 times as many as Tesla's 344,000, but its net profit per vehicle came in at around $1,200, just 1/8 of Tesla's $9,570. Tesla is believed to lead the industry in terms of net profit per vehicle sold, even ahead of players like Mercedes-Benz. While these car brands are the two giants of the automobile industry, they differ significantly in business strategy and valuation. Toyota's main strength is its low-cost, high-quality manufacturing, while Tesla's main strengths are its strong brand, attractive designs, and battery and autonomous driving technologies. Toyota is evolutionary, while Tesla is revolutionary. Although these may seem like mere business strategies, they go a long way to affect the business trajectory. Dan Ives is optimistic that Tesla can turn things around and survive any future recession. He claims that Tesla's management only needs to reset investors' expectations with more realistic delivery and financial targets for the new year. According to him, Musk needs to lay out a more conservative number to hit this jittery backdrop, and that is what he does. Do you think Tesla stock is gradually hitting the bottom? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And while he's still here, and if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.